In the summer of 2000, we saw how the US Federal Reserve began to cut rates. And not because I wanted to, but because I had to. Credit markets then almost froze, and this forced the Fed to urgently cut rates. Although publicly they continued to say that they wanted to keep rates at a normal level until at least 2020. And by the way, today, 5 years later, the credit markets feel unimportant again. Moody's even lowered the credit rating of US Treasury bonds. For the first time in history, all three credit agencies downgraded the US rating: S&P, Fitch, and Moody's. And although many call it a disaster, pay attention to how alternative assets to bonds, like gold, reacted to it last time. The chart of which is before your eyes. For them, it was a push to an explosive peak. And then the coronavirus pandemic happened, and they had to abruptly reset the bid. It fell to almost zero. In addition, at the same time, BlackRock wrote a report in which she literally gave the Fed instructions on what to do: print money, throw it into the market, and pump as many reserves into the banking sector as possible. BlackRock called it a direct reboot. At the same time, the US Treasury Department was distributing financial checks and helicopter money to people. Before that, of course, they consulted with BlackRock. So BlackRock and the US Federal Reserve worked together to save each other and use taxpayers' money to create the biggest market bubble in history. And we observed it in 2021. This market was completely at their mercy. And today, we see confirmation of this. For example, at the end of April, at the inauguration ceremony of the new chairman of the SEC, Paul Atkins, who, by the way, is a pro-currency figure, Donald Trump talked to the press. He said that he would not dismiss the head of the Fed, Jeremiah Powell, and would not impose 145% tariffs against China. This turned the markets around. Also, the price of Bitcoin, as you can see on this chart, is 100% correlated with inflows into spot Bitcoin TIFs, most of which fall on BlackRock. They still control the markets, and even the cryptocurrency ones, and it is they who determine their future, including now the future of Bitcoin. And they will continue to expand and strengthen their control. After watching this video to the end, you will understand why they need this control over digital currencies, and how it is related to deglobalization. It should be emphasized that it is important to look at the situation in the long term. That's for sure. And in the long term, the level of uncertainty in the financial markets has indeed reached unprecedented heights. But let's not forget that Trump's actions are not just about tariffs. This is, in fact, an attempt to destroy 50 or 60 years of hard, gradual, and painstaking work to create globalism. Trump, like other far-right politicians and thinkers around the world, oppose globalism. And it's not just about tariffs or trade, it's not against the very idea of global competition. So in the long run, we are not dealing with the expectation of some short-term benefits in 6 months or a year. We are witnessing the dismantling of globalism. And what in return? Perhaps a new feudalism, a decentralized protectionist world. We don't know what it will look like yet, but one thing is for sure: these people with Trump at their head are waging a real war against globalism. This economics professor blames Trump for everything. He talks about protectionism as if the countries will stop trading with each other altogether. But he doesn't understand the main thing. Decentralized technologies will allow international trade to reach a new level. A level without risks, without hacking, without currency wars, without the need to blindly trust someone. All these risks are inherent in the current financial system, but will be absent in a decentralized one. And this is what will make it possible for a new kind of protectionism to appear, in which countries will still be able to trade, as if under globalism, but at the same time maintain their sovereignty and protect their internal interests. He presents protectionism as something bad, but in reality, it can become a new model, as large-scale as the globalization that has not yet ended, but without its inherent disadvantages. This is important to understand. The anti-globalist position in geopolitics is not just about the economy, it's about wars, about destruction, invasion, occupation of territories. Now we are going through a cruel and unstable stage in international relations. Not only economic globalism is being destroyed, but also liberal globalism. Until recently, it was believed that it would be possible to update or rebuild such global institutions as the IMF, the World Bank, the TO. And now it's all falling apart. Don't forget, there is a huge technological battle going on right now. We are at a historic turning point. Artificial intelligence and new approaches to how people work are completely changing the relationship between man and labor. This is not just a matter of redistributing us influence, everything is much deeper. A global challenge awaits us. It is necessary to rebuild the entire international system of cooperation in the context of the geopolitical crisis and technological revolution. It is no coincidence that deglobalization has started right now. This is because technologies are becoming mature enough so that countries can produce goods and services for their citizens themselves. This is made possible thanks to automation, robots, artificial intelligence, drones, and other advanced technological solutions. And international cooperation in the future can be based on blockchain, where the rules will be sewn into smart contracts, and the protocol itself, without the need to trust intermediaries. In conditions of such geopolitical tension, trusting someone other than yourself is fraught with very big and unpleasant consequences. We must regain some of the independence that we have lost. This concerns defense, trade, finance, and, in my opinion, especially how money moves inside Europe. Now the financial markets of Europe are fragmented, each country has its own rules. It is necessary to restore order, unite, standardize, and perhaps control it alone. And the second important point is digital payments. Now, when you buy something online, transfer money between people, or simply pay via phone or card, it all goes through non-European systems. Visa, MasterCard, PayPal, Ally Pay. All of them are either American or Chinese. It turns out that the entire infrastructure of our payments is not European. Wait, does this mean that when I pay for something with a card or phone, the data about me goes outside the EU, to the USA? Is it even legal? Yes, that's right. Of course, they comply with European regulations, but the vulnerability remains. Therefore, Europe needs to have its own alternative. This implies another plus of the new system, provided with a decentralized blockchain, cryptocurrencies, and digital currencies. This is data ownership. In other words, you own your own data. For example, in the case of the European Union, it is the European Union that will own the data of its citizens, using the digital euro. That's why they need their own digital currencies. To eliminate all vulnerabilities associated with the need to trust a third party to regain full control, which we talked about at the beginning of the video. Control over markets, over finances, and over people. And including over Bitcoin and cryptocurrencies. I used to be more skeptical about this, but now my view has changed a little. I began to cautiously believe in it. The main reason is the need for greater strategic autonomy for Europe in a world that is becoming increasingly hostile. The advantages of this are particularly noticeable in the field of payments and international finance. European payment systems and financial infrastructure are highly dependent on foreign services. Because of this, our economic functions may be vulnerable if foreign countries suddenly change their policies. And many Europeans are no longer ready to tolerate this. In this context, the digital euro can be a very useful innovation, but the benefits go much further. The more goods and services are valued in euros, the better Europe will be protected from currency fluctuations. And the growth in demand for euro-denominated assets will attract foreign investors and reduce the cost of borrowing for government agencies and companies. This is the so-called excessive privilege of the dollar, its status as the world's main currency, which brings great advantages to the United States. In times of crisis, this privilege is even more pronounced because investors are looking for safe assets. The fact that a significant part of European government bonds are now being bought by foreigners shows that the euro is an attractive and reliable currency for investments. Why he was initially skeptical about the digital euro, and now he has changed his mind. All because of Trump's tariff wars. It now supports the digital euro after the US threatened Europe with tariffs. He says that settlements with foreign trading partners can be conducted in euros. And if the euro is digital, then foreign companies will be able to pay for goods and services with digital euros. about the way China is doing it now with its digital currency. And as we said in one of the last videos, China has already launched a trading platform for 1 and 2 trillion digital yuan, bypassing the Western company SWIFT. And as a nice additional effect, the digital euro is likely to increase the attractiveness of the euro as a global currency. Secondly, we currently do not have a single capital market, as in the United States. If you are, for example, an American investor and want to invest in companies all over Europe, you will have to face the rules and laws in 27 countries at once, for example, in matters of corporate law or bankruptcy procedures. This clearly reduces the attractiveness of our capital markets. In addition, because of this, we are losing billions of euros in the form of capital that could help develop new companies and technologies. If we can harmonize these rules and remove the remaining barriers to cross-border capital movement, it will reduce costs for foreign investors who want to enter the European capital markets. As a result, this will make it easier for European companies to issue debt obligations and help to further develop the capital market. The digital euro will be public and open, like cryptocurrencies, but unlike them, it will be centralized. This means that the digital euro will be compatible with the cryptocurrency world by default. And if you were running a country, you would definitely want as many people as possible to invest in companies in your country. This would mean a stronger currency, a more developed bond market, a more reliable credit market, more tax revenues, in short, everything that one could imagine and dream of. For the first time in our monetary policy statement, we mentioned the digital euro. This should be a clear signal that we are not only ready and taking on the necessary hard work, but also recognize the fact that other European bodies will hopefully accelerate the pace at which we will be able to implement the digital euro. Other European bodies will step up efforts and accelerate the pace on this issue.